All right, what's going on? Um, this is a video over the system that I use to trade US30. I've been getting asked all the time on Instagram about this. It's super easy. It's probably the easiest system. I guarantee you. I personally have not seen this on YouTube. I haven't seen it in any form of course. I could be wrong. There may be somebody out there that trades this way, but if so, prove it because I haven't seen it. But only reason why I'm really making this video is for I don't know. I feel like it's overdue, and pretty much I don't know. I don't ever plan on releasing courses. I can care less about releasing courses when the information is fully available online. So I'm really just giving away my US30. You can use it. As you can see, I also trade GBP USD, any pairs. I've traded any single thing, any and every single thing using this strategy or this system. I don't like saying strategy, but it's super simple. It's basically what I'm doing is, for example, basically what you're seeing right here on the left are all instances where this system works to the absolute T if you have patience, if you wait for the full confirmations. So you can see today, even with the news going on, with the Fed and the inflation rates going up, textbook all in there. It's just like three opportunities for you to go short, a few opportunities for you to go long. 9:30 every day, New York every day. It's always an op on US30. Always an op. 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 So what we're gonna do is I'm gonna go through literally every single one of these for this whole video and show you step by step what I do when it comes to looking for a trade during the New York session. For one, I'm not taking a trade on US30 unless it's 9:30 Eastern time, or if the setup applies around the 9:30 Eastern time. I'm gonna say that again. I do not enter a trade on US30 unless it's 9:30 Eastern time. Okay, so we're gonna go right into it. So what I'm doing, I'm gonna go ahead and delete this off real quick, just so you can get a clear visual. So what I'm doing personally is I'm looking for I guess you can say I'm basically measuring candles, an up candle using the fib, and I am using the lower time frames below it to kind of, in a way, calculate and anticipate where this market is going to go. Typically, you want to be looking for this in the form of like, if it's at like a key level like 34,750, or if it's at a H1 support, H4 support, if there's divergence. If you don't know what divergence is, I'm not going over that in this video unless it's clear as day and I can mark it up. But that's really what I'm looking for. Divergence, price at a key level, price at a key price, time and price, basically. Time and price is basically what I'm looking for. So for example, let's just go straight into it on this thing. I mean, on this time frame. So we're on the M15 right now, right? Okay. So if I'm waiting for 9:30, I have this made to show right at 9:30 Eastern time. So if I'm waiting for 9:30 to look for an entry, I am stalking always the M15, M30, H1, and sometimes the M45. And I'm looking for an up close candle. So for example, if we go to the, let's go, I'm gonna put it up two time frames. If we go to the M30 and trying to anticipate this, for example, you basically have to figure out which time frame is going to be the one to give you the clearest data. And you have to understand candlestick anatomy, candlestick patterns, and this candlestick correlations. So, like I said, I'm using the Fibonacci from the last up close candle. I'm measuring this last up close candle, low to high, and then I'm dropping to a lower time frame. So if I look for the up close candle on the M30, I'm going to the M15 to try to anticipate price creating a another candlestick formation on the lower time frame as a confirmation for me to enter the trade. So if what is happening? I just did some skipping. Hold on. Okay. So like I said, sometimes it's not there. So like right now, I did it on the M30. Left side is M30, right side is M15. I did the last up close candle, and then at 9 o'clock on the dot, you can go over here. 9 o'clock is the right side is the M15, the lower time frame, and I'm looking for a candlestick formation. You can say that on the lower time frame of the M15, that at 9 o'clock it formed a bearish engulfing. I don't like bearish engulfings as far as looking for entries using this technique. So you could take it as long as it retests one of these levels that you see here, the 88% or the 50%. I really normally look for price to retest zones. So for example, like if it did the candlestick pattern I was looking for, I would have waited for price to come down here and then retest into this zone, and then I would be going short. But this is not the candlestick. I mean, this is not the time frame, the data that I would have taken entry on, or I did, because these are all everything that you see that I've marked are trades that I actually taken, and I was just basically just going back and then just like just testing them out. Okay, so let's go to the M15. So we have this. That's basically the data from the M30 that I wasn't feeling. So now I would use this up close candle here. It's a repetitive motion, but if you have patience and you do it constantly, you're gonna find what you're looking for. So okay, so we have a up close candle, and we're basically trying to anticipate a bearish engulfing or a sell off after the up close candle. So now, since I'm on M15, like I said, you would drop down to a lower time frame, than you were measuring the candlestick on. So now we drop to the M5. So on the M5, we're probably going to see something that I love to trade. Okay, boom. Okay, so what we're looking for now at this point is, since we're measuring the M15 at 9:30, we're looking for something to have formed as far as a candlestick reversal pattern. And my favorite thing to trade is the basically, I think you can call it a piercing line in a way, or it's like a piercing line, or it could be a three crow, but it's not really a three black crow. It's like if you measure this candle from low to high, this next candle closed 50%. I'm not going to go with candlestick patterns. You should really just look them up online and just understand them, and you'll be able to understand this strategy or system to DT. So for me, I'm waiting for 9:30 to form a pattern. You probably would. Normal people would probably see the price sold all the way off of here, so it's too late. Not me. I would basically be waiting and anticipating price. Since it's made this pattern, we had a up close here, piercing line here, and then the third candle closes below the opening price of this candle here, the bullish candle here, which is the black one. So I will be anticipating price retracing near or within this 0 and 50% level. Once price gets near or within, I'm already sizing in. So here, no matter what, I'm slapping lots here, and I would have got in maybe another one here or within this green zone, and then my stop loss would have been up here. So your stop loss would have been 26 points, and you would just be basically exiting the trades at these levels, which is the 50%. Boom. So that could be TP1, TP2, TP3, TP4 at the negative 200, TP5, TP6. And then after that, it's just like, I basically, once it gets past the negative 300%, I'm just like, okay, I'm not doing the half marks. I'm just going to keep going, and so on and so forth. And that's just one example of the strategy or system. Okay, so let's go to another one. I'm probably only going to go over maybe two. Okay, so, and I do want to say this though. I do love looking for this on the M15 right before the 9:30 opening Eastern Standard Time. So I'm most of the time staying on the M15, and I normally have the M30 and the M15 on the right side, but for this video, I'm just going to go over this. Okay, so like I said, I'm looking for an up close bullish candle, which is the black, and I'm measuring that from low to high. And then I'm basically trying to anticipate the following candle on the measured time frame for an entry. So I'm on the M15 on the left. You go to the M5, and that's when I'm looking for an entry. So on this candle here, which is 915, let's just go ahead and put a diagonal line here just for visuals. Vertical, 915. So on this candle, I'm looking for a bearish candlestick formation to form, and then I want to retest of the zone that it basically left. Sometimes it doesn't close below the 0 and 50%. Sometimes it closes, it does a bearish formation, which as you can see here, it's a bearish engulfing, it's a 3-line strike, perfect setup. And since it's done that, I will be looking for price to retest this zone of the 50% at 88. This is super big, and I picked this concept up from QBanks. But if there's no retest, I do not enter the trade. I'm going to say this again. If there's no retest, I am not entering the trade. It needs to retest one or two of these zones or close or near for me to enter the trade. And my stop loss is always at the 120%. Always, always, always. So like I said, we have a 3-line strike, bearish engulfing, following candle. I'm anticipating price coming into it, and I'm going short. TP1 is always at the negative 50%, TP2 negative 100%, TP3 negative 150%, TP4 negative 200%. So you could just from doing this strategy alone, it's bringing your risk down to virtually nothing, and it's giving you a high probability odds of being successful on the trade with like a super small tight stop loss, like right here. So you will lose 7 points to make, let's say, like you shitting me, 70% or 70 points with just this basic patience. This system literally takes basic patience, and you're going to be successful with it. I do it day in, I do it day out. You can go to my Instagram at Man of Absolute. Go through my Forex highlights. It's like I do this every fucking day. So now let's go to another example right here. This looks like I can already tell just from looking at the candlestick formation that this was the M30 play. So let's go ahead, let's do it. I'm gonna erase it and just so I can show you visuals. Okay, so like I said, I try to do it before or during the opening of the New York session. So boom, boom, from low to high. So what I'm doing, like I said, is after I measure the up bullish candle, I would do it on every single candle. If it keeps going bullish and I know I'm going short on it, I will do it on every bullish candle until it does what I'm looking for. So like I said, I'm measuring on the 930 candlestick. So at 10 o'clock, that's when so at 10 o'clock, okay, I'm doing a horizontal. So at 10 o'clock, I'm looking for a bearish candlestick formation, because what you're basically trying to anticipate this bearish engulfing forming and then continuing down to your TP levels, which we end up getting here. So the left side is the M30. M30 is the measured candle, and then I went down to the M15 for confirmation. Sometimes it's not on the M15. It's not on, and sometimes it's not on the time frame right below the measured candle. Sometimes there's 2 time frames below. It's just you kind of got to like be able to go through each time frame to try to find a correlation in the anatomy behind it. So like I said, 10 o'clock, I'm looking for a candlestick formation of form. What I see here is for sure absolutely a 3 black crow. Easily 3 bearish candles. And then like I said with the last 2 examples, I'm waiting for price to anticipate to push back into this zone or near it, in or within it. So I'm already sizing again. I probably would not have had my full position in because it didn't get there. But as soon as price, like I'm trying to anticipate it with a market order. So as soon as price pushes up into this zone or closer to the zone, I'm already like one lot in or something like that. And then I will be anticipating price pushing down to these green points, which is TP, TP, TP. But I do want to give a form of caveat. I know I said my 120% is my absolute stop loss, but my stop loss. But in this case, you wouldn't want to do that because that's 150 points, and you don't want to lose 150 points. When it forms this low, my stop loss is always going to be like roughly 50 points. I'm not willing to lose no more than 50 points. That is the maximum I'm going to lose. So I will be risking 50 points to make 1-to-1, 2-to-1, a little bit over 3-to-1, and so far and so forth. And that's really pretty much it. I don't think I need to go over any more examples. You get the idea. If you feel as if I need to go more examples and you want to see this done more in a live case scenario, I guess I can figure out a way to record it because sometimes it takes a long time, and I guess I could just learn how to edit videos and all of that. But that's pretty much it. To be honest with you, I actually would love to show you one more example because I literally enjoy doing this shit. So okay, so we have the M15 here. We have an up close candle. Okay, M15, M15. What do we got here? I just say M30 on the left, M15 on the right. Measured candle on the M30. Bullish candle. Even if it's a little doji looking, it's still bullish. I'm still measuring that. Drop down to a lower time frame, which in this case is the M15. This is a very important video right here because a lot of people see like a piercing line forming that will form. Let's make this wider. I need to make this super clear. A lot of people will see a piercing line when it forms a 50% below the previous bullish candle, and then they will try to take the retest of the 50% on the third candle. This is one reason why you don't want to do that, because of this shit right here. So you would have went short 50%, and boom, shit, that would have hit my, well, normally when it's this high, if I enter off of 50%, like I said, it's going to be here. So 20, so I'd have been stopped out at 20 points. So I would have waited. Well, I did wait for the third candle close. It's always like a 3-candle formation that I normally wait for. And then on that fourth candle is the retest. So fourth candle retest was here. So I'm looking for price to retest. Once it closes, the third candle closes below the 0%. I'm looking for the fourth candle retest of the 0 and 50%. And then that's when I'm sizing in and going short when it gets near or within. So I would, like, again, I would not have gotten my full position in, but still enough. Stop loss is either going to be 120% or 50 points. If the 120% from my entry is over 50 points, it's going to be 50 points maximum. And then I'm just riding this down. TP1, TP2, TP3, TP4, TP5, TP6, TP7, TP8, TP9, and you get the idea. And then I do want to go over one more trade that I took the day of June 16th with news. I believe it's the news came in as far as the interest rates and all of that. This one was a little bit of a waiting game. Okay, so this one ended up being a scalp. I believe I ended up. Let me see. M15 measurement. Yeah, this ended up being a scalp. I remember this, and then I ended up like taking profit super early on this just because I don't know, it just felt right. And as you can see, price ended up pulling back a good amount. Okay, so we have the M30 measurement here. Struggling. All right, that's good enough. Let's just actually do it. That's probably the issue. Let's drop down to the M15 on the left, M5 on the right. Yeah, this is exactly what I saw. Okay. Okay, so we have the up close candle on the M15. Let's zoom in, and then so we have the measurement time frame. So we're dropping down to the execution time frame, which is the M5 from the M15. So we got 1, 2, 3. So at 9:30, I was looking for a bearish candlestick formation to form, which we got here, which is again, like I said, like 2, 3 examples ago, we have a bearish engulfing with a 3-line strike, double confirmation below the zero, and then, like I said, I know I said below the zero, but like I said, this was the entry time frame. So price closed down here after the bearish engulfing 3-line strike, and then pushed in here. And that's when I was looking for entries with stop loss at 120%. And then TPs down here. So TP1 and then TP2. I think it ended up going like, I think I closed around TP1 because it started like doing all this nonsense here. And it started bouncing, and it got up here. I was like, all right, I'm gonna hold it since it came back in. So if it comes back down to my TP1, I'm gonna lock in. So I think I only got like 20 some points off of that. And then here is the actual final example. I think this is exactly when the news actually came out. Measurement. All right, so let's go just back out. This video is getting super long, but this is when the news came out. It's like the technicals are always going to be there, and it's going to correlate with the news most of the time. So we have the up close candle on the M15, and then on the M5, I believe. Yep. No, was it M5? Yes, it was the M5. Okay, so at 12 o'clock, what do we have? We have the Pearson line, and then like I said, I wait for the third candle to do its thing, and then close here, and then I'm looking for a retest. The thing is, price was already within the zone of 0 and 50%. So after I saw this third candle close within here, I've already went short. And I'm not even gonna lie to you, I did not take all of this. I did not get all of this. I just I got in here, TP1, TP2, TP3, TP4, TP5. That's it. I was done. This candle. I mean, that's a lie because I ended up taking it down to the lows of yesterday, and then here, and then after this, I was done with it because I was like, I can't fully predict on where the market is going to go, but I knew that it was going to take liquidity from the previous day if it was bearish for the day, and it did. That's my only target. That's my only goal. I'm done. I'm out. And obviously, as you can see, price literally kept going far beyond my fib work and murdered all of my TPs that could have been, but that's part of the game. But I'm hoping that you got some good knowledge from this and you apply it. If you end up using it and it works, give me a shout out on Instagram at Man of Absolute. Let me know. I'm pretty sure, like I said, I'm pretty sure if you can just sit there and anticipate, have patience and do this strategy, wait for price to retest into your zones, you will be a profitable trader. I guarantee you that. Because the only times that this system doesn't work for me is if I try to chase. And like, for example, if you try to chase down here and it does this, and then this candle, you can say you hop in down somewhere within this bearish candle here, and then it just like whips up, and then you just like already just down. Look at that, it's fucking crazy. So many points just for no reason. That's when I kind of like with a closing, I'm like, all right, that's me chasing the market, dumb trade, whatever. But Other than that, if you just sit there, you wait for the candlestick formations that I've mentioned, and you wait for them to pull into your zone, you will be profitable if you manage your risk. It's all about managing risk. If you use this system, be sure you're managing your risk properly. Do not over leverage, and you'll be good. And that is it for the video. Peace.